So Bitcoin is down, fear is way up. And let's be honest, it kind of feels like the sky is falling. In this explainer, we're going to unpack this whole mess. We'll look at 3 totally different theories for why this is happening, from predictable market cycles to massive global economic shifts, and even a theory about a shadowy financial attack.
Okay, let's get into it.
Right, this is the big question. It's on everyone's mind. Is the dream over? Is this some kind of catastrophic failure? Or is there something else going on here that most people are missing? We're going to peel back the layers and really dig into what could be happening.
First things first, let's just set the stage. This isn't just about Bitcoin. We're seeing a huge sell-off across all kinds of risk assets right now. But Bitcoin, well, it often acts like the canary in the coal mine. You know, the stock market has opening and closing bells, but the Bitcoin market, it never sleeps. It's 24/7. You can sell it anytime, anywhere, and because of that, it's often the first thing to react when big global stuff starts to happen.
Okay, to really get what's going on with Bitcoin, we have to talk about its most famous, and let's face it, most feared characteristic, its volatility. I mean, you see those wild price swings, and it's natural to want to run for the hills. But here's a thought. What if that volatility isn't a flaw? What if it's actually the very source of its power?
Now take a look at these numbers. This is really interesting. Yeah, Bitcoin's volatility at 54%, it absolutely dwarfs golden stocks. There's no denying that. But you have to understand this is the fundamental trade-off. You just don't get the chance for that kind of explosive growth without also accepting these gut-wrenching drops. They're two sides of the same coin. It's a package deal.
And this quote just nails it. Think about it, not as instability, but as energy, as life. You know, a dead asset, it doesn't move. An asset that's alive, that has vitality, moves a lot. And those movements, both the ups and the downs, that's the engine that drives its growth over the long run.
In fact, if you look at the history, these drops are completely normal. On average, you can expect Bitcoin to have a 30% correction, give or take, every 3 to 6 months. This isn't a sign that the system is broken or that it's all falling apart. It's just the price of admission. It's like the market taking a deep breath. These drops are what shake out the speculators and, honestly, set the stage for the next move up.
Okay, so if we just accept that these drops are part of the game, what's causing this specific one right now? Well, this brings us to a classic debate in economics, a real showdown between 2 competing ways of looking at why markets do what they do.
So on one side, you've got the technical analysis folks. These are the chart watchers. They believe everything you need to know is right there in the price history. They see human emotions, fear, greed, playing out in predictable patterns, kind of like waves in the ocean. Then on the other side, you have the macro camp. They think looking at charts is just looking at noise. For them, the real drivers are the huge levers of the global economy. What central banks are doing, political tensions, the way money flows across the world.
Now, the case from the technical camp for this current drop is, well, it's almost spooky. Look at this timeline. For the last 3 major cycles, the time it took Bitcoin to go from its absolute bottom to its peak has been nearly identical, about 10-50 days. And the time from that peak back down to the next bottom, almost exactly 1 year, 364 days. If you follow that pattern, this sell-off was almost like clockwork.
But the macro people have an equally powerful story. They're pointing to Japan raising interest rates. Now, why does that matter? Well, it basically ends this popular strategy called the carry trade, where big investors borrow money for super cheap in Japan and invest it for higher returns somewhere else. When Japan turns off that free money spigot, a lot of that liquidity just vanishes. At the same time, here in the US, the Fed's been pulling money out of the system to fight inflation. All of this makes investors really nervous, and what do they sell first? Their riskiest assets. And right now, that's big. But what if this isn't a coincidence? What if these big macro forces are being used as cover for something a little more intentional? This brings us to our third and by far most provocative theory, that this sell-off is being deliberately engineered through something called the death spiral.
Now, this idea isn't new. I mean, think way back to the Ottoman Empire owing huge debts to European banks. When a crisis hit, the banks basically just took control of their tax system to pay themselves back. The core concept of using debt as a weapon to force someone to sell their assets, that's alive and well today.
So here's how it works in the modern world. A company needs cash, so it takes out a loan that can be converted into its own stock. But here's the toxic part of the deal. The contract is set up so that the lower the stock price falls, the more shares the lender gets when they convert the debt. See the problem? It gives the lender a massive incentive to actively bet against the stock, to short it, drive the price into the ground, convert their debt for a gigantic pile of shares, and then dump them all on the market. It's a financial trap, and it's designed to profit from a company's destruction.
Okay, so what in the world does this have to do with Bitcoin? Well, meet MicroStrategy. It's a public company, but for all practical purposes, it's basically a giant Bitcoin fund. As you can see, they're holding around $59 billion worth of Bitcoin, but they're holding it against $16 billion in debt. And just to service that debt costs them about $800 million a year.
Now here's the critical point. How do they get that cash? Think of it like this. If people are optimistic about them, they'll happily pay more for a share of their stock than the Bitcoin inside is actually worth. That's called trading at a premium. When that happens, MicroStrategy can just sell new shares to raise money. Easy. But if investors get pessimistic, their stock starts trading at a discount. And for MicroStrategy, that discount is like a dagger to the heart. It means they can't sell stock, so their only options are to burn through their cash reserves or, and this is the key, to eventually become a forced seller of their Bitcoin.
And this is the core of the whole death spiral theory. That large financial players could be intentionally shorting MicroStrategy stock, trying to push it into that discount zone, with the goal of forcing them into a fire sale of their Bitcoin. A sale like that would crash the price, creating a cascade across the entire market. It's a huge, high-stakes game of financial chess, where MicroStrategy is the pawn and the entire Bitcoin market is the prize.
So, wow, you have these incredibly powerful forces at play. Predictable cycles, massive global economic shifts, and maybe, just maybe, a coordinated attack. It's enough to make anyone want to hit the sell button. But the real key to surviving this, and maybe even thriving in it, has nothing to do with trying to predict the next move.
It all comes down to this. The noise, the fear, the crazy price swings, none of it can really touch you if you have a strong, personal reason for your investment. If you can't clearly answer the question why you bought something, then any price drop is going to feel like a complete disaster.
Let me give you an analogy. Imagine you buy a plot of land because you have inside information that a giant football stadium is going to be built right next to it in 7 years. If the price of land next door drops tomorrow, do you panic and sell? Of course not. You check your thesis. You ask, hey, are they still building that stadium? It's the same with Bitcoin. You have to ask yourself, has the fundamental reason I bought this changed? Have governments suddenly stopped devaluing their currencies? Is the network still secure and running? If your original thesis is still intact, then the day-to-day price is just noise.
And this brings us to what might be the single most important rule of all investing. Never, ever put yourself in a position where you become a forced seller. The way you do that is by matching an investment's volatility to your own time horizon. A super volatile asset like Bitcoin demands a long time horizon. We're talking years, not months. You have to be prepared to navigate the storms, not just enjoy the sunshine if you ever want to reach your destination.
So in the end, we're left with one final question to frame all of this. Every time the market panics like this, is it really a crash, or is it something else? Is it simply a massive redistribution of wealth from those with a short time horizon and a weak thesis over to those with the patience and the conviction to see it through? That's the question to really think about.